Hi everyone, in today's video we'll be going through the members only weekly report. First of all, we'll look at the market update. So both S&P 500 and NASDAQ gapped down on Monday after the DeepSeek news. There was a huge sell-off in Nvidia, AVGO, Broadcom and all the semiconductor industries, which is now being referred to as the Sputnik moment for the AI war. Market did rally after the huge sell-off on Monday. It did try to recover on Tuesday, Wednesday and Thursday, and even on Friday the market did open very strongly, and then there was some news about Trump's tariffs plans. So there was a very bad close on Friday. So but both the indices are still above the 21-day moving exponential moving average. My observation is that if there is some more news or some more developments around this tariff, Trump's tariff plan, this might lead to some kind of a volatility in the market. And just like last week, this week is also going to be a big week for earnings. Google, Amazon, Qualcomm, Alibaba, PLTR, ARM, they are all going to be reporting next week. So it will be an exciting week for earnings as well. Coming to my observation of the market, the long-term trend is still up because the lower swings are being bought by the investors. Buyers are still in control, and this is primarily because we are still in a slow rate cutting phase. And I have been saying this for like few months now, and this slow rate cutting phase means that cash is cheap, means capital is cheap, means that it's a good tailwind for all the tech and growth companies. They can borrow more capital and invest in their growth. And it's also good for banking and financial services companies. They have all been recovering very well because a low interest rate situation kind of means that people will tend to borrow more capital, and the banks and financial services will make more money on the interest and all that. The second reason is that because of the US election year, investors are very bullish on the American economy after Trump's win, after the election win. But we still need to be careful because we are coming after, this is the third year after back-to-back 20% returns. Yeah, it's crazy because index returning 20% year after year is something crazy because, that is something crazy for me. Yeah. And the volatility is also given during a slow rate cutting phase because and one thing that I would like to mention is that those investors or traders without a systematic plan or rules will be shaken out of their best investment decisions. Just like the volatility that happened on Monday, there was a huge sell-off. Some of the best, the people who react based on their emotions because they don't have a plan, and then they panic when they see all these headlines about DeepSeek, about or Nvidia crashing 17% a day and all this, they will be shaken out of their best investing positions because nobody knows whether what will happen in the future. So without a plan, you need to have a plan of action for your best investing decisions, or otherwise if you're going to be reactive to the news and if you're going to be reactive to opinions, there are lots of people with almost everybody has an opinion, and if you are going to be making decisions based on these opinions, then you will be shaken out of your best investment decisions. You need to cut out the noise from this market and news and all this, and you need to have a systematic plan that is based on objective rules and it is not based on any emotions. I just included a quote from Morgan Housel. Like he said, in investing you must identify the price of success, volatility and loss amid the long backdrop of growth, and must be willing to pay it. Volatility is a price that you pay for getting the best returns. This doesn't mean that you need to be holding on to something that is crashing for weeks and weeks and weeks. That doesn't mean that way. Volatility means you need to be having the mental fortitude to withstand some of these price fluctuations or volatility to hold on to your winners. And coming back, the general watch list, I've removed some names, but the overall names still continue to be the same. You have to be looking at, like I mentioned here, you need to be looking at growth and tech stocks and banking and financial services. Most of these names like Reddit, Roblox, Twilio, Robinhood, these are all companies that will benefit from this low rate cutting phase. And some of these stocks that caught my attention this week were Atlassian team. They had a good they had a good quarterly earnings, and then gapped up the next day after the earnings was announced. You can see from here, after the earnings was announced, there was a huge gap up. I'll be looking for this is definitely one that you need to watch out and keep in your watch list. I'll be looking for a pullback or a continuation pattern like a flag or something before I could take trade based on my discretionary setup. Currently it is not in the top 10 in my systematic portfolio, but it's slowly getting there. We do not know. But if I want to take a discretionary or like a pattern based setup, I will be looking for this pullback or a continuation pattern. Twilio, yes, you can see from here it bounced off from this flag pattern or like this continuation pattern or the triangle kind of a pattern. And it's been rallying very well, and it's not given up anything even when the market has been doing badly, like on Monday or on Friday. It has been only there is only a small drop, showing that buyers are significant, like putting a lot of money behind this to withhold the price. The price is one of the best indicators to show whether who is in control, whether the buyers or the sellers. And right now Twilio is very strong, has a very strong momentum behind it. The other one, Robinhood, is also one of the strongest momentum stocks. I took a tiny position at these levels. I mentioned it in my previous letter as well as on Twitter, and right now it is also trying to show some kind of a breakout. I will wait for a short-term pullback because it is way stretched from its 21-day moving average and 50-day moving average. I'll wait for some kind of a pullback before I enter a full position in this one. And the other one, the next on the list, is Affirm, which is also a financial. It could benefit from the short-term or the rate cutting phase that we are in. So as you can see from here, it is trying to bounce off from the previous breakout levels, and the moving averages are also converging, and it is also has its earnings. Now if you are a very conservative investor and if you don't like it is better to avoid names that have earnings in a few days, or it is better to avoid because there will be huge volatility, and if you have very tight stop losses, you will be shaken out. So if you are a very conservative investor, better to avoid those names that have earnings that are coming up in a few days or in the same week. Now Google is another one that is showing a breakout before its earnings. It has been consolidating nicely, and as you can see from here, it is bouncing off from the 21-day moving average, which is showing some kind of a good strength. So this is another one that it has given a breakout on Friday, and this is also something that you can watch. Now I've been mentioning about this rate cutting phase, and I've also included this graphic. This shows about how the various indices have performed. This is from a Franklin Templeton report about how equities behave in a rate cutting phase, and as you can see from here, NASDAQ and growth in general does very well because it's pretty obvious, because capital is cheap and companies can borrow a lot of money and then invest in their growth. That's the reason why like cloud stocks or tech stocks or AI related, and all these growth industries like AI, semiconductor, or even like quantum energy, and all these things are nuclear, all these names would be doing very well during these phases. And this is also evident from how the Russell 1000 growth ETF has been behaving since September last year. It has been moving above its 21-day moving average, 21 week. This is a weekly time frame chart. As you can see from here, it's a weekly time frame. As you can see, it's been above its 21 week moving average and showing significant strength as well. And coming back to some of the trades that I took, I initiated a position in Asana. This is after Teams or Atlassian's positive result. I have a very tight stop loss for this one, because the reason I took it is because it had a huge gap up earlier and is now consolidating the sideways movement, and it's tried to break out from these levels around the 21 price level. I took this one, like it has tried twice, like almost 3 times, once here, twice here, and thrice here. And I have a very tight stop loss for this one because it's in my discretionary portfolio. I do not know which direction it will go. If it goes in the right direction, I'll trial my profits. However, if it falls back and hits my stop loss, I'll take the stop loss and move on to the next trade. On Rubrik, this is also another one. I wanted to take this one around the break of this continuation, break of this flag pattern, but I missed this one. So, but right now it retraced back to its breakout levels. That's why I took a trade at the 75 levels, and I have my stop at 71. This is also another one to watch out. It's a tech and growth stock. And one important lesson that I want to share in this video is about the like a lot of even the best setups will sometimes fail, will fail often. Like for me this week, AVGO and CRDO were some of the best setups that I was looking forward, but because of this DeepSeek panic, these retraced and hit my stop loss. And the best thing to do in this kind of things is to just take your stop loss and move on to the next trade. Taking small losses prevents big losses, and it protects your capital. Now in investing and trading, you need capital to be a participant. Now if you keep losing, if you have hope in the market thinking that it might come back, you will be losing a lot of money. And I have lost money in my, like when I started trading, like when I hope for something that it will come back to a break even trade, or it will break even, or I will sell it after a break even, or if I'll sell it for a small profit. When I hope for something like that, it never happens. In most of the cases, there will be some trades that it will turn around and then it will come to break even, or it might even become a profitable trade. But that means that it will reinforce a bad behavior in you to hold on to losing trades, but it's a very bad behavior. In 8 out of 10 cases, it will never turn around, and those two trades that might turn around to a break even trade or a small profitable trade will create a bad habit in your trading plan. You need to stick to your plan, need to stick to your stop losses, you need to follow your plan, because in this game what matters is having big winners and small losses. Small losses are very critical component of having positive expectancy or being a profitable. When you cut short your winners, you are cutting short your profitable this one. And when you let your losing trades become bigger losses, you are maximizing your loss. It is it's a rational thing when you think like that, but because of our biases and because of the way our brain works, when we look at losing trades, we don't behave in a very rational manner in handling trades. And the final call out is that the price levels mentioned are just my price levels. You need to decide your own price levels and exit or stop losses depending upon your personality, depending upon what time frame, and depending upon your trading style and your risk tolerance. And all the stocks mentioned are for educational purpose only. And please do consider subscribing to my Patreon channel. I have a few members have joined last week, after I started posting about my trading system, and after I've been sharing more on Patreon and on Twitter. And do join the community if you want to follow my journey. Thank you for watching.